Hello fellow investors, in this video I'd like to do a quick review of Suncor's last financial statements that were issued on February 14th, 2023. So these are financial statements for the fourth quarter 2022 and the full annual financial statements, which is great. So what do we see on these financial statements? We see that the company has issued 52 cents for the last quarter of 52 cents of dividends for the fourth quarter of 2022. It has repurchased equivalent of 54 cents a share in the same quarter. However, it was purchasing quite a bit more shares before that. So these two dividends, if we multiply them by 4, we get about just a little bit over 9% of return to the shareholders in actual dividends and the share repurchase program. If we move on to the financial statements, on the income statement, we see revenue growth. This revenue growth I would attribute for the most part to not to the fact that the company got more oil out of the ground. The unfortunate fact is the company withdrew actually a little bit less of oil, especially in the last quarter in 2022 than in 2021. However, this is due to higher oil prices in 2022 than in 2021. So again, higher oil prices led to higher revenue in the 12-month period of 2022. It has also led to higher revenue in the fourth quarter of 2022. If you compare it to the fourth quarter 2021, what I would also pay attention to is the fact that if you look at the interest expense, even though interest rates have been rising over the past year in 2022, the interest expense in the fourth quarter has actually declined. This is due to the fact that the company has repaid quite a bit of its long-term debt. So going forward in 2023, I would make an estimate that in 2023, Suncor is going to spend about $1 billion on interest versus $2 billion of interest expenses in 2022. So well, I expect, again, about $1 billion of interest savings in 2023. Moving forward, so net earnings for the year, about $9 billion. Market currently values the company at about $62.5 billion. So, and we have about $9 billion of net income. If we look at the comprehensive income, we have another about $1 billion of comprehensive income, which is for the most part from actual gains on employee retirement benefits plan, net of income taxes. So I would ignore this amount. However, again, in 2023, we are likely to see this number going up by $1 billion due to interest expenses being lower. So we could assume that the company generates about $10 billion in actual profit. So this profit is, if we translate it into per share amounts, is quite sufficient to maintain the current $2 dividends a share. Again, this is good. And it's actually enough to maintain the share repurchase plan, which was at about, well, again, in the fourth quarter was about at 50 cents a share. So the income statement looks very safe. On the balance sheet, if you want more information about the balance sheet, you can view my previous video on Suncor, where I discussed the results for the third quarter. But on this over here on the balance sheet, I just want to mention that it looks extremely safe. There is nothing to worry about, and the company over the past 12 months repaid $4 billion of long-term debts. This is an astonishing result, and the company has barely has any long-term debts. It can cover these long-term debts in just 1 year of profits. So the company looks very safe. The most important statement for a mining company is obviously a cash flow statement. So when we turn to the cash flow statements, again, cash flow provided by operating activities, we have a strong increase in operation cash flow if we compare quarterly growth. For the 12 months periods, we see that the company generated about 35% more in operational cash flow, or almost $16 billion, which is great. Then it expensed almost $5 billion on investing activities. So this number, operational cash flow minus cash flow used for the investing activities, gives us cash flow that can be distributed to the shareholders. So it's going to be approximately $11 billion. So $11 billion versus divided by the current market capitalization of the company of $62.5 billion. All of these numbers are in Canadian dollars, equals to 17.6% return to the present investor. This is a great return, considering the fact that the company is likely to continue grow this return through the share repurchase, at least through the share repurchase program, which is going to go through in 2023. By the way, the company has also mentioned in the previous quarter that it's likely to increase the share repurchase program in March 2023. So you're looking at about maybe 17.5 to 20% return on your investment if you are a long-term investor going forward. What else on the statement of cash flow? We can on the quarterly statement we can see the dividends, the amount of actual dividends, and the amount of money the company used to repurchase its shares, and again the amount of money the company spent to distribute to the shareholders in cash, and $5 billion spent to repurchase its own shares. So again, the company can easily maintain this pace and can easily pay these dividends. It is likely that the company will stop at the end of 2023. The company is very likely to stop repurchasing its own shares, at which point I would assume it would increase the dividends paid on the common shares. So when it does, the price of the shares are very likely to increase in value. So, talking about the valuations, I think the company is valued quite fairly. I would assume if it's hard to, with interest rates rising, it's hard to value this company exactly. However, I would assume that it can easily double in price. A lot depends on the oil prices. So based on my charts and the current oil situation, I would assume that we are trading somewhere, for the past quarter we've been trading somewhere near the bottom, especially since Russia is going to starting from March, Russia is going to produce less oil. I think it's going to create some discrepancies in the oil market. So it is likely that the oil price, in my opinion, it's likely that the oil prices will increase. However, if they stay at least the same or somewhere in this range, Suncor is likely to generate around 20% of return on invested capital. So the investment looks very safe and quite interesting. So if you like the video, please like it and subscribe. Cheers, goodbye.